Good morning, good afternoon, and good evening, ladies and gentlemen. My name is Dr. Greg McLeod, and I want to welcome you to another edition of Bulls versus Bears, the weekly Forex Forecast. And we're going to get started analyzing markets and give you my outlook for the various currency pairs, indices, and commodities. Okay, before we get started, this is brought to you by, we'll share my screen with you, and we can go ahead and get started. And let's go ahead and share screen one, okay? Fantastic, okay. So this is the Elite Traders University presentation. Elite Traders University is an organization dedicated to helping prop traders to pass their prop trading tests so they can trade real sized money. And we have a fantastic track record of helping traders pass their auditions, being able to achieve the 10% goals with less than 5% drawdown. That's what we do on a consistent basis using my proprietary system. I'm a 28-year Wall Street insider, former currency analyst, one of the largest forex broker dealers in the world, and I worked at top-tier banks and other financial institutions. I'm uniquely qualified to train you and help you to pass your prop trading challenge, okay? So take a look at us at www.elitetradersuniversity.com and see what we have to offer. There's a free masterclass there. Go ahead and check that out, okay? Now, this is Bulls versus Bears Weekly Forex Market Outlook. And this is a risk disclaimer on your screen to make sure you understand all this associated foreign exchange trading. And we are going to get going real quick here, okay? Now, we just had, we have non-farm payroll coming up this week again. And, Fed has talked down the market. And inflation seems to be on the downslide, but the GDP was higher than expected and caused a little bit of a, angst for the for Jerome Powell and the Fed. Okay, so Jerome Powell wants to keep inflation down. When you have a very happy stock market, then that's very hard to do. Okay. So let's go start this is my market heat map. My market heat map is my top secret weapon, my all-purpose trading tool. I don't jump around from website to website looking for information. Information is the most valuable commodity I know, say Gordon Gekko and Movie Wall Street. And I assemble the most powerful pieces of trading information ever on the web in one place. And I actually give that away for free. Come to my website, mymarketheatmap.com, and you can check out the heat map during an active market. Right now it's Saturday, and but during the active market, these tiles will flash colors and will green is an uptrend, red's in a downtrend. Very easy graphical interface to know what to trade, because knowing what to trade is the most important thing. If you don't know what to trade, then you're trading the wrong thing, right? But then there's the economic calendar here, right? And sometimes you have to refresh it and give it a little kick, and then the economic calendar right there. Click show more.
$6 trillion are made every day.
And so we have the economic calendar right here on the front page, absolutely free. You can check this out at mymarketheatmap.com. But we're actually going to go to the inside because there are other maps there. There's equity heat maps. We're checking out what's going on with the equities, right? They're all great because this is the market. There's also commodities as well, so you can monitor commodities heat map. There's also a Forex major heat map, which is for free on the front page. The 4 major currency pairs, that's where 85% of the market is traded. But if you want trading all currency pairs, like looking at the exotics, the yen pairs, and other currency pairs, cross breaks, then we have them all listed here, graphically interfaced. Red in the downtrend, green in the uptrend, and gray stay away. Right now the market is flat, and so that's why it's all gray. We also have global stocks. You can look at all the global stocks from around the world, including the US, and you get a view of the top performers there. And also you can have all the instruments at one time on one spot, including crypto, and you can have crypto majors and all of them. When this lights up, it's a very beautiful thing to see, very easy to trade, okay? So let's go to the economic calendar. There's a lot of tools here: charts, quotes, economic calendar, Forex TV, financial news stream, market hours, technical screener, national holiday sentiment, currency correlations, Forex calculator, and much, much more, right? But the economic calendar is what we're going to look at. Again, you can get this for free on the front page, no charge. Let's take a look at what's going on. Let's scroll down to our dates. show more, refresh, and we can see, and show more, some more, and some more. So we get the entire week, and we can see on Sunday, we have Japanese data. We have the Tenkan Large Manufacturing Index. The previous number was 1, forecast call for 3. That could cause the yen to rally. The flags, I call it this part of the trading called fund with flags. Fund, F-U-N-D, but it's also fun too, because by looking at the flag, you know what's being traded. Big money on Wall Street. I work for one of the largest broker dealers in the world, and we had Monday meetings, and the first thing we did was check the economic calendar to see what was moving, what was going to catch the eye of the big trader, the big hedge fund, the big investor. Those people are moving $1 billion of the currency. $1 billion of the currency is called a yard. And they're moving yards of currency. They're not going to a Discord chat room to figure out what's going on. They're going to go to the big boys economic calendar. They're going to see what news is coming up, and they're going to start building positions going into that news announcement, right? So right now, we see the yen data coming out. You're going to see the yen pairs being active going into Sunday, Monday, right? And next, we're going to see Chinese Caxton manufacturing PMI. He said, well, Greg, I don't know what PMI is. I don't know what Caxton is. I don't know what any of this stuff means. You don't need to know what it means. You just need to know that this flag is telling you that not only the Chinese currency is going to be moving, but as I've said in previous broadcasts, that Australia and New Zealand are the largest trading partners. China's largest trading partner. Okay, so when you see the Chinese data come out, you're going to be looking at the Australian dollar and the New Zealand dollar, because they're geographically located very close, and Australia's economy and New Zealand's economy is very dependent on what happens in China. In fact, if China's economy catches the cold, then Australia and New Zealand will catch the flu, okay? If China's economy is booming, then Australia and New Zealand are going to benefit from that boom, okay? So that's why we look at Chinese data. Even though we don't trade the Chinese currency, just think of the Australian flag and New Zealand flag when you see the Chinese flag, okay? So that's coming out at 9:45 p.m. These are all times in Eastern time, because New York is the financial center of the United States, the largest economy in the world. Actually, but the Forex, the capital Forex is actually London. London has more volume than the US. However, I do everything in Eastern time. I don't live in Eastern time zone, but I do all my times in Eastern time, New York time. New York is basically like the capital of the United States. People know where New York is. They don't know where Plano is, or Denton is, or Saskatchewan is, right? They just know where New York is. So that's why I do everything in Eastern time, okay? Now, if you're a commodities trader, you say, yeah, I'm from Chicago. Go Cubbies, and I use Central Time, Greg. Well, that's for you. Go ahead, set your clocks. I've got a bunch of clocks. I don't care. I make money, right? And time is money. Moving right along. At Monday, we have at 2:30 a.m. We're going to have Swiss CPI. CPI stands for Consumer Price Index, and anytime you see the I, that usually means inflation. Inflation. Let's say consumer prices. They're expecting consumer prices to rise from 106.3 to 106.5. And if this is so, these are forecasts, which means they may not always be right. In fact, they get it wrong sometimes, right? And when they get it wrong, the market has to adjust, because the market is always kind of predicting what's going to happen next, right? And they're basing it on their forecasts. Those forecasts are wrong, then they have to change their positions, right? So, but you look at the Swiss franc is going to be in place. You want to look at dollar Swiss, you want to look at pound Swiss, you want to look at Aussie Swiss. Those currencies are going to be in play. Use your technical analysis, use the system. If you're not using my system, whatever system you're using, you want to put the Swiss franc on your watch list and watch that basket and see how it moves, okay? Because if you're trading the Israeli shekel versus the South African rand, it's not moving. I don't know why. Because everyone's trading the Swiss franc, guy. The party is here. They're telling you where the party is, and you want to trade something else, And that's kind of typical for retail people. Retail, a lot of people like, I want to do my own thing. You know, I'm a trader now. I don't want to listen to my boss. I don't have to follow instructions from people. I'm just going to you do your own thing in the market, you're going to get screwed, right? There are certain boundaries, certain rules, there's certain customs that are followed by professional traders that retail people don't know. And then they mess up and they go, oh, I didn't know that, right? Like, so it's very important to know whatever field you get into, it has a certain language, it has a certain customs and norms and things to look at, and you have to abide by those. Because if you don't, you know, you look kind of silly. You know, you're going to a fancy restaurant, you're eating steak with your hands and tearing into it like a caveman. Well, you know, that's probably not what you want to do. However, if you go to a barbecue restaurant and you're eating your ribs with a fork and a knife, you look like an idiot too, okay? So you gotta know what the norms and customs are so you don't be an idiot, all right? Because idiots lose money, okay? Okay, so next we have the Eurozone. Now this flag is the German flag. It's not the Eurozone flag, but basically Germany owns the Eurozone. They are the largest economy in the Eurozone. And so the news will affect the Euro, okay? Very important about the Euro is that we're going to get, the Euro is very sensitive to astro cycles, and astro cycles meaning the full moon, right? And we're having a full moon on July 3rd. And so usually we see some type of rally, rebound, or increase in the Euro during the full moon, okay? Not that I don't follow astrology, I'm a Christian. However, there are a bunch of people, JP Morgan has the largest astrological library. And as they say, millionaires follow astrology and billionaires have astrologers. So they're all following these cycles and the cycle moons and October 31st and Day of the Dead and all this other stuff. They follow that stuff. That's why it's really important that if you're a Christian, that we need to trade and get that money out of the hands of the wicked. You know, the wealth of the wicked is in the hand of the righteous. I know I'm turning some people off. Sorry about that, but it's my show. I do what I want to do. If you don't like it, turn it off. And if you like it, then share it with a friend. Okay. That's great when you trade your own money and you can make six figures, you get to do your own thing, right? Viewers, you know, I've got about 3,000 viewers, and you got subscribers, whatever or not. I don't care because I don't need sponsorship or commercials or anything to support my channel because I press the button to make money. So I don't really care, do I? Really? I do care about giving you information that you can use. Okay. Now you may not like my views, but you can use my information. Now, if you throw my information away because you don't like my views, then you're an idiot, right? Anyway, moving right along. At 10 a.m., we don't have an 8. Usually we have an 8:30. Usually there's two news cycles in the US. There's an 8:30 news cycle and a 10 a.m. news cycle. 8:38, there's nothing at 8:30, but notice that the market will move differently at 8:30. It will act just like news was released because why the bots are programmed to, if it's 8:30, do this. So you've got this bot action that might go on at 8:30, right? So be careful at 8:30, even though you don't see a news item there, treat it like there's news because you know that time slot, the markets get funky. 10 a.m. we have U.S. ISM manufacturing PMI. This is a purchasing managers index. They actually survey people, manufacturing managers, and they see that the tone of their optimism, 46.9 goes up to 47. And now this may be good for the US dollar because a high number would mean that people are optimistic, and if people are optimistic and want to move the economy forward, then the Fed was going to come in with higher rates to try to squelch it. So this may be good short term for the dollar, even though that ordinarily in a non-inflationary period, it would be bullish for the euro, right? So so watch this. This may actually tank the euro and rally the dollar on a Monday, Manic Monday, turnaround Tuesday. But look for the euro and other currencies, euro, the pound, and the Canadian dollar to rally. I usually have Manic Monday, sell off, turnaround Tuesday, Wow Wednesday, Super Thursday, and then Freaky Friday when everything turns back, the adult turns back into a kid kind of thing. Then you get that Freaky Friday turnaround, right? So I love that meat of the market at Tuesday, Wednesday, and Thursday. Wednesday is like where everyone's like, sell the, pump and dump, either dump it and then pump it back up, or, usually it's some type of a reversal counter trend move on Monday. And then Tuesday, Wednesday, Thursday trend. Then at the close of Thursday, we start reversing for Freaky Friday. And then we start all over again. Okay. So, and then we have non-farm payroll on Friday too. Let's see, maybe, yes, we do. I know we have a 4th of July holiday too on Tuesday. So it'll be 4th of July holiday, but we will have an RBA. It's not the 4th of July in Australia because they don't celebrate US independence. They're not US, right? So even though the markets will be closed on Tuesday, the Australian dollar will be in play. And will be in play even this week. So look at how we're positioning in Aussie dollar. They'll start consolidating and they'll start positioning themselves. Okay, they're not just going to wait to the last minute and enter this trade. They're entering this trade, building positions leading up to this. Okay, they're just like, if you plan a party, or you plan a cruise, and you may buy your ticket in advance. You might buy it months in advance. You may put some money aside. You may put the tickets on layaway and pay it off ever so slowly. But then once it gets closer to that date, then you start loading up your luggage and you get on the boat, right? But the preparation has to be done months in advance, right? So the preparation to trade this is going on now. We're seeing the Australian dollar starting to base, consolidate, and get ready to move on this announcement. The expected hike in rates of 4.1% to 4.35%. They may surprise higher, depending on their inflation data. We might have to look back at their inflation data to see if it's been trending up or it's been trending down. But I think they paused last time. I think they, but I'm not. Don't quote me on that. After that, we're going to have the balance of trade out of the Eurozone, out of Germany. It's supposed to rise from 18.4 billion to 19.1 billion. That's going to should be positive for the euro. If this forecast is true, now these are forecasts, okay? People with advanced finance degrees at major universities who work in forecasting and models and all kinds of stuff, they come up with these numbers, but they get it wrong sometimes. And if they do, and other traders are relying on this information, they might say, oh crap, these guys are wrong. We need to go short or go long, right? So that can happen, the oh shoot kind of thing, right? The oops, right? Oops, we got the wrong number. Sorry about that, guys. And you probably saw that in Trading Places, right? Clarence Beaks, they got the fake crop report and everyone was buying, and there's like, they've got the wrong crop report. Start selling, sell, Mortimer, sell, right? Because they have the wrong report. Because somebody switched Eddie Murphy switched the envelope on Clarence Beaks, right? And for those of you who are like, who's Clarence Beaks, Eddie Murphy? Well, you need to rent Trading Places on Netflix or something and watch it. You'll get a fantastic education on the markets by watching that and get a good laugh too. Tell Eddie I said hello. FOMC minutes comes out. FOMC is stands for Federal Open Market Committee. It's our U.S. central bank, and it doesn't even spell bank, but that's Jerome Powell and those guys that hike interest rates, and they raise interest rates. No, they skipped last time, so they're going to actually talk about why they skipped and what the future holds for interest rate policy in the United States. And that will be either very positive or very negative for the US dollar. And so we'll check that out. If if they want to raise rates more or longer or higher, we say that they're hawkish. Okay, hawkish. Hawkish, they want to hike rates. But if they think that, well, maybe we're hiking too much and the economy is suffering and interest rates are too high and people are losing their jobs, let's like stop. Let's like lower the rates or keep rates unchanged for a bit. But let's see how our previous hikes have impacted the U.S. stock or U.S. markets and the economy in general. Okay, now those guys we call doves. Doves. So it's doves versus hawks. Hawks want to raise rates. Doves want to lower rates, and they represent factions within the Fed. The Fed is composed of these Fed governors, and they vote, and sometimes they're unanimous. Sometimes there's what they call dissenters, or guys that say, you know what, you guys were wrong. I'm not voting for that. You know, but if they're in the minority, it's like 4-2 or some type of, you know, it's like Bank of England has like, I believe 8 people or 9 people on their board, and it's like a football, like 0-0 to 9 or something. They either vote to hike, vote to cut, or vote to keep everything the same. So we'll see how they voted. That's what we want to see. If there was a split decision, right? You know, if some of the guys have defected, some of the hawks have turned to doves, that would be very bearish for the US dollar. So at 2 p.m. on Wednesday, you might see the market get flat. Okay, that's something that's a hot tip, hot trader tip. Don't be up at 3 a.m. in the morning like, oh man, I'm gonna trade London session, and nothing happens, right? Because everybody and everybody's mama is waiting for the FOMC minutes to come out at 2 p.m. Eastern time, okay? So if anything, sleep in, take a nap, don't trade, because, but come back at 2 p.m., brother, it's gonna be on and cracking, right? You don't think, oh, they're just meeting minutes, they're just gonna read what the agenda said. No, it really, 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 it can create lots of volatility in the market, and you don't want to miss it. 2 p.m. Wednesday, July 5th, day after 4th of July, be there, right? And then you're gonna have the balance of trade from Australia. So the Australian dollar is definitely in play, especially if you see multiple flags for different announcements at different days. Those are usually going to be where the money is going to be in the market. Okay, you want to be where the money is. The money is like the party, the flag's like the party, right? And the rave party. And you don't want to get there, get in the wrong party where there's this flat beer and no chips. And don't be so holy that you don't know what I'm talking about. Because when you're a teenager, you probably went to these places. But I'm just using an analogy that maybe you can relate to or even visualize that if you go to a currency where there is nothing going on, no one is there, then it's not going to move. It doesn't have to move just because your 55 moving average crossed over your 34 moving average. The market don't give a darn about your moving average, right? Or your CCI, right? Or the bullish engulfing candlestick pattern on a currency that's not even of any interest to anyone, right? So you want to look at what's on this calendar and that they're telling you what they're trading, okay? They're like, well, I don't know what to trade. What should I trade? Like, hello, there's a flag, okay? So sorry. It's that I'm going to blame that blonde espresso, the double blonde espresso shot that I had at Starbucks. Just hit you on the backside like, awesome. So everybody said, Greg, you're a little wired today. He's like, yeah, it's a Starbucks. Here we go. Aussies trade balance. We have Thursday, ADP employment change. ADP is a private company that makes paychecks. In fact, when I worked for the brokerage, my paycheck said ADP. So who would know about employment more than people issue checks? They know how many people are employed because that's how many checks they send out, right? So they say that the number went from 278,000 for the month of June to 230,000, and so that means there 48,000 people didn't have a paycheck, right? And you might say, well, that might be bad for the U.S. dollar, and yeah, it'd be bad for the U.S. dollar. In fact, it'll be good for the euro though. The euro will rally, the pound will rally, because they'll probably say, wow, if that many people lost their jobs, maybe the Fed's interest rate hiking is working. Because think about it, if people don't have jobs, they can't buy stuff. If they can't buy stuff, stuff doesn't go up in price. It goes down in price because there are fewer people with money that can buy stuff, okay? So The job destruction is part of the Fed's job too. No one's going to tell you that, right? Greg, that's a conspiracy theory. No, just think about it. Simple math, right? And you watch. This number comes out. If it comes out at 220 or 210, then the pound, the pound, the euro, the Aussie dollar, they're going to go nuclear. You know. So why is the market, and then the stock market is going to skyrocket too. The stock market, you know, why are the stock markets rallying and people lose their jobs? Let you think about that one. I'm not going to go deep into that, but you know, you'll go on Thursday. Oh my God, Greg was right. It's like, yeah, I've been watching this for 30 years, guy. You know, you learn some things. And that's why you should sign up for mentorship so you can learn from me, right? While I'm still on this planet. That when Mark Douglas was on this planet, guess what? I was right there. I was with Mark Douglas. I was taught by Mark Douglas. He's not on this planet anymore. You can't learn from Mark Douglas. You can want to read a book from him, but you can't be trained by him live. I was. So, so take it. I'm not saying I'm going anywhere. I actually plan to be running until about 900 this one. See, I want to see warp drive, and I want to go to like, I'm looking at the full moon right now. It's pretty wild. But, you know, so I'm looking at space travel and warp drive and that stuff. So I'm going to hang around until we get that. Flying cars. They promised me a flying car. Okay. Anyway, I digress. Moving right along, we have CAD IVPMI, always good for fun on the Canadian dollar. 53.5, expected to drop to 52.3. Again, that could be bullish for the Canadian dollar. Actually, it might be bullish for the US dollar if you take US dollar versus CAD. Because it's very interesting, because sometimes when this data is negative, it's too negative, then you know the currency drops. So if it's negative, then oh, they're not going to hike rates, then stock markets will rally. And the stock markets and currency markets are actually tied together. So what we're looking at is the volatility in the interest, right? You know, because the worst thing you can do is get into a currency that doesn't move at all. We know that this will move. We may not be able to use these numbers to actually game the market, right? Unless you have a predictive indicator like we have in mentorship, which, you know, well, you have to invest in yourself and be able to invest in the course to develop, to take advantage of that. But if you don't have the predictive indicator, and you don't have that, what you can do is you can wait for an hour or so after the news and look for the true direction, okay? Find out what the overall long-term trend is and see if this news takes a counter trend. And when it does, you can come back and you can smack it the other way and make good money that way. And that's a great way to build your, you know, increase your equity in your prop trading account, right? Here's a JOLTS job openings. This is pretty cool. At 10.10, supposed to drop to 9.9. A drop would be bearish for the US dollar, but bullish for euro, pound, dollar, the pound and dollar, yeah, euro, the euro, the New Zealand dollar, Australian dollar, right? Swiss unemployment rate, 1.9%, dropped to 2.3%. Again, as they hike rates, jobs are being destroyed. Look, the unemployment rate is going higher, right? Now here, the US employment data has been very strong. The unemployment rate expected to stay at the same at 3.7%. They're looking at increasing it to 4.5% to get inflation down. So you see there's a correlation between unemployment rate, the employment rate, and the unemployment rate and the and inflation. Non-farm payrolls, 339,000 was the previous number. They're looking for a drop to 225. If this comes in at 225 or lower, we would have a very screaming, very awesome stock market. And, you know, unfortunately, you know, the other 100,000 jobs that don't get created, you know, but it's like what Spock says, the needs of the many outweigh the needs of the few. It's harsh stuff. It's that whole Keynesian economic theory kind of stuff that we're bound to, where we're forced in a scarcity mindset, when really there's abundant opportunity, there's abundant money, there's no shortage of money. look, we know the Fed can print it. They press a button, they can print as much money as they want, and nothing happens, right? So there isn't a shortage of money. There isn't a shortage of opportunity. There isn't a shortage of talent, but we're bound in a system which dictates that, oh, well, we have to cause pain to others in order to cause things to get better, which doesn't have to be the case. That's a whole another topic, whole different philosophy. The philosophy of the kingdom, in fact. All right, unemployment rate 5.3% in Canada. Expected to go higher for 5.2. That would be bullish for the currency. At the employment rate 20,000, negative 17.3 thousand. Employment change to 20,000, and the participation rate 65.5 to 65.4. Again, the data is stronger. It could be bearish for the currency, but all we really was looking at, all we're looking at here is if we see a Canadian flag on Friday, on Thursday, then the Canadian dollar is going to be in play. So you could look at so many opportunities. You look at Aussie CAD, CAD Yen, CAD Swiss, dollar CAD, and you can look for opportunities because that's where the money is going to be flowing into ways of trading the Canadian dollar or ways of trading the Australian dollar, right? And anything else that's not on here, then we don't really want to trade. Okay, so let's go to the technicals. And I'm going to switch to this tab here. We're going to go to Trading View. And I use Trading View because they have really clear, easy to read charts. I like starting with the dollar index. US dollar index is a basket of currencies versus the US dollar. I like going out to the monthly chart and thus taking a very high level view, like the 50,000 foot view, going back several years. We get this. Now, this is what you can't really do on a phone. I know people I like trading on my phone. It's so convenient, but you really miss out on what's going on in the market. And I know very few traders that trade okay on their phone consistently. Once you get the idea, if you go between the two, and hey, this is in a downtrend, so I'm just going to look for sell opportunities on my phone, then that might be very helpful. But if you have no clue what the trend is because you never ever look at a monthly chart or weekly chart, then you're just asking for a whooping, a butt whooping from the market. There we go. So we have this uptrend. We haven't gone anywhere in 1 month, 2 months, 3 months, 4 months, 5 months, 6 months of consolidation. We haven't gone anywhere. Now, while the dollar moves sideways, it actually gives an ability for the other currencies to rally if the dollar is moving sideways, right? So in this, in fact, we have looks like a harami. What I really like doing though is I love these candles. I used to use many years ago. One of my students saw one of my old videos from 2010. They go, "Greg, you used to use Hakinashi back when you were the brokers." I go, "Yeah, I sure did." Don't know why I go, because these guys are kind of like, "Oh, yeah, look at that. What does that mean?" It's like, no, I use Hakinashi. I remember why. It was come on. Green is up, red is down. It keeps it very simple, right? And you get some dojis, yeah, in the sideways means we're not moving anywhere. I love Hakinashi candles. It's they're the bomb, right? So monthly chart, higher highs and higher lows, but just moving sideways. So bulls versus bears. A sideways move in the dollar is actually bearish, right? So even though it's moving sideways, if you're trading against something that's actually moving higher, well then why would you put your money into something that's moving sideways? We can move into something that's actually moving higher. And so we can go down to weekly chart and you can see again this sideways price action. We haven't broken below 100. We haven't broken above the 105 area. We're just kind of kept in place, right? So let's drop down to a daily chart and you can see the same kind of thing. You can play the range. right? Or we're going down or going up, going down or going up. We're going up short term, but we might head back down to the support area. And we're just right in the middle of the range. We're right smack in the middle of the range. So really the dollar is, pretty dead money right now, especially because normally seasonally May, we usually see a strong move in the dollar, and we really didn't get that. We didn't get the sell May and go away because of all the, the FOMC stuff that's so active, that we really haven't really seen the big sell-off in the risk assets that would send the dollar higher. Ordinarily, you go back, like back to May of last year, you can see that the dollar just took off, right? Pull back in June, took off, right? Here, same time period, we haven't really gone anywhere. Okay, I'm just going to drop that one more time to a 4-hour chart or dealer chart so you can see anything going there. However, let's go to the euro. I'm going to go back up to our monthly chart, go to the euro. The euro is called the anti-dollar because it moves opposite the dollar. The dollar is a basket of currencies, including it's heavily weighted toward the euro. So here is I'm going to remove all drawings. And so here is our monthly chart of the euro. And you can see we have at lower highs and lower lows. Very clear. These are called Heikin-Ashi candlesticks. And so you don't have where is the bullish engulfing and all blah, 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 blah. No, it's just great. It's like, you got some wicks at the turning points, but for the most part, if it's red, I want to stay short. If it turns green, I want to go long, right? So here is we're bouncing off support and we're trending up, and then we're kind of sideways on the euro. We've been moving in the same range for the last 3 months on the euro, haven't really broken out. However, we do have a nascent uptrend, right? From the lows we had back in 995. But overall, we have a really long downtrend, right? But we have a trend channel, and we really haven't gone up toward the area where we might see, we can draw more. I mean, this is not a correct trend line. I'm drawing through candles and wicks. We really haven't gone to the top of that channel anywhere near it. Let's drop down the weekly chart. And you see the weekly chart, we're actually crawling up an upward trend line. Weekly trend is up, right? When the weekly trend is up like this, this is a tide. This is a market tide. This is a tsunami. We went from bearish to bullish, right? And we're just crawling along this trend line. And so we look at taking longs in the direction of the trend, right? Let's go ahead and drop this down, walk it down to a daily chart. And it looks like we got a little bit of pullback because you know why? It's going to be back Monday. So we look for price to maybe come back and touch this trend line. I would draw a trend line across the top here. And when that thing changes to green and breaks this trend line, I am in it to win it long. And so that I would look at bulls versus bears. I'm actually constructively long on the euro dollar. Euro dollar is very sensitive to a certain cycle, astronomical cycle. And I can show you that. In fact, where is it? Moon phases. And we can see that we have really, I want to, they update these things. That, here we go. So this is our full moon, and this is our new moon, right? And notice that we have full moons in the euro, that it usually goes up, except for here, right? Here it didn't do that, right? But we were in we broke trend, we broke a trend line. And so now we wouldn't take in a downtrend, we would only look for sells, right? But then once we broke the trend line, look for buys. Well, look, we take our buys. The sells don't work that well. Look, this is a sell, new moon sell. Didn't you look 2 red candles, but in an uptrend, our full moons are taking us up. Until what? We get a trend line break where a full moon is not going to help you on a trend line break, right? Trend is reversed, new moon is in flip, and then here we go. We have our trend line break here. Beautiful, beautiful full moon right there on June 5th, 2023. Rally, 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 rally. Then we have our new moon. and we had new moon on the 20th, drop, 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 and we're expected to have a full moon on the 5th of July, right about here, and the price starts falling, Mag Monday, turn around Tuesday, which line right up for a positive up. Now, I usually reserve this type of analysis for my mentorship and advanced training, but I'm going to throw this in bulls versus bears just to let you know some of the things that we do that we don't even that's not public. There's some stuff that we have just for the family, but I think that you guys are family. You've been watching this for a while, and so I'm actually going to let you into a little bit of what we do in mentorship, things that can help you secure your prop trading account that can secure your future, right? You need an edge. And if you're watching everything that's on YouTube and it's all the same stuff, then the market is not going to reward people who are watching average stuff. If the average trader loses, 90% of traders lose. So you're saying that stuff that you're watching is part of the top 10% and everyone's watching it. How come it's not working, right? Anyway, so that's that on the year. Bulls versus bears, I am bullish. Now, this may work for other things, Australian dollar, pound dollar, I think it works. It doesn't really work for, and actually it works in reverse on the US dollar, okay? So again, this is moon phases, and you can get that on the, in the trading field, okay? Okay, let's move right along to, in fact, we can even look here, right? Let's go to the next currency pair I don't think did we have any pound data? Did we have any UK data on the economic calendar? I don't think we did. I didn't see a UK flag on here. So yeah, I mean, if you want to look at the pound, we can, but the next thing on the calendar would be we look at the euro, let's look at the Australian dollar and the Swiss franc, and the Japanese yen, right? So let's look at dollar yen. USD JPY, right? And ordinarily don't look at Japanese data, but we're going to look to a monthly chart, and we're going to remove all these drawings, and we can see that this thing is on a tear uptrend after a pullback and a rally, strong rally, and we have some upper resistance. We had some highs back here at the 150, 189 area of support that we bounced off of on January 2nd, low, and we've been trending up from there. On the monthly chart, we have a clear uptrend, and so we would look for buys or being long and ignore the sells. I mean, yeah, you can scalp the sells, you can, but if you have focus, a lot of people said, Greg, I'm ADD, I don't like really sticking in front of the markets very long. This. Well, you really should go counter trend if you've got phones ringing and spouses, asking you to take out the garbage while you're in the middle of a trade, and your kids want help with the homework, and then your friend knocks on the door, and your neighbor wants to talk to you. You got all this, these things, emails popping up and pop-ups. You really want to be able to be in a very quiet place when you trade and be very focused. But if you can't be focused, you want to be into something where if you make a mistake, you're not going to be crushed by it. If you trade counter trend, the mistakes can crush you very quickly. So I really, even though I'm probably one of the kings of counter trend trading, give me a counter trend, right? I don't need a trend really, But if you're just want like lazy river kind of move, wait for a color change, red to green and uptrend buy, and if you forget to close it, look, it just keeps going, right? You trade this, you don't know how long this lasts. You're up, you go to bed, and you wake up, and this thing is way up here, and you let me know if that's happened to you in the chat box, right? In the comment box. Why? Because it doesn't look. There's more green than red. So why are you trading red? Because you broke the trend line. Because the guy knew you said I should do that. And no, don't do that. Okay. Has it worked so far? I was talking to a beautiful young lady, and she goes, "Well, how are you doing?" "Well, I'm getting better. My losses are smaller." "Your losses are smaller. Okay, good. What's your win rate?" "Well, I'm winning about 4 out of 10 trades, like 40%. I'm like going, okay. How does 95% sound to you? Well, I don't think that's possible. Well, my students do that, right? They do that. So my thing is, do you want that, or do you like losing 6 trades out of 10? Right? Is that what you want to do? Right? I mean, I've got these are my 90%ers, 95%, 96%, 168% win rate, 168% ROI. You know, I mean, is that what would you rather do that? She goes, yeah, I think I want to do that. I'm like, that's a good idea. That's a good answer, right? And it's really stupid simple. Red is down. But if the higher time frame is up, don't take this. This is a trap. This is like rat bait. Oh, look, cheese trapped. Cheese trap. Cheese trap. Ooh, look, more cheese. Idiot, don't take it. Wait. When it changes green, just like at the stoplight, wait till it changes green and go. Okay. Can you do that for me? Okay, Greg, good. And let me know in the chat box how that works out. Email me at greg@leadtradersU. I know it sounds simple. I'm a simple guy. I grew up in South Central LA, gang infested. I had to choose red or blue colors. Like I chose green. I didn't want to die. I went to school, I didn't want to die. So like, and then now I like colors all day long, right? Make money looking at colors, right? You can too. Okay. Let's look at what else is the economic calendar. We looked at Japanese yen. You know what? Dollar is kind of weird. Let me look at Aussie yen. Aussie yen is a really good one. It's really closely tied to the what's this thing called? The S&P. What's that thing called? The S&P 500. Oh, look at that. Oh my God, it's like going. There we go. Color change. Old high is a target, look left. You want your targets, price target, look left. Where should I take profit, Greg? Look left. Right there. There you go. You got to take profit 1, take profit 2, take profit 3, right? Trend line break, green candles, Aussie. Now we can get a little pullback. We do have Japanese data. Sometimes that data is, you got to understand that the Bank of Japan does not want their currency to get strong, ever. Okay. It may go strong for a little bit because it's come up for air. It can't go in a straight line, right? But I mean, if you look at this on a weekly chart, we've been going up in an uptrend for the past 3 years. 3 years. You have people saying, well, I think this is the time for the yen to get strong. Not going to happen. Now, if it does happen, be afraid. Be very afraid. Because if the yen gets strong, it means that we have a financial crisis. It means that the world is getting ready to come to an end as we know it. So we don't ever want the yen to get strong, because when it does, really bad things happen, right? 2008, 1996, this bad things happen. We have a meltdown, just really bad things happen. 1990, we had a big crash. Now, this crash too was huge, this thing, big, big things happen. Oh yeah, crash of 87. Yeah, 86. Yeah. Oh, this is the whole stock market crash in 87. This stuff, the market was like trouble up here in 84, right? Double bottom breaks, crash 80, recession 85, but 87 crash was huge, right? So as long as Japan can continue to print money and everything comes cool, we're good. But if we do break trend line, it's here was probably something Brexit or something, or yeah, different long-term capital. There's different things that have happened with Brexit, right? Oh, we had the shutdown of the government too. So usually if the yen gets strong, it's bad news. The Japanese government wants to weaken their currency in order to make things like Nissans and PlayStations and Sony products and cool and Lexuses. Those things are cheaper because of this currency manipulation, right? This is Aussie yen, right? So you look at pound yen, it's going to be the same way, right? Because why? Japan has negative interest rates. Why would you put your money in a bank that charges you money to keep it there? That's what a negative interest rate is. Think about it. Let's say you earn like $2 in interest in your checking account, but they charge you $12 in fees. Well, that's a negative interest rate because you're being charged for them to hold your money. So money leaves Japan because that's what's going on in Japan. If the Japan banks hold your money, they will charge you to hold your money. Okay. So what does money do? When money is not respected, it goes where it's respected. And it goes to US banks where they pay 5%. It goes to Australian banks where it pays 4%, 4.3%. So money goes where it's appreciated. And we can see that in a chart. This is yen going into the pound, going into UK banks, earning this interest, right? So the only way that Japanese banks can attract more capital is to raise interest rates, which is not going to happen because their export economy is dependent on them keeping a weak yen. So whoever you're watching and they're telling you, hey, well, the yen's going to reverse one day. No. Okay, another one that's kind of crazy is the Swiss franc, USD-CHF, and a lot of people got screwed on this a long time ago, back in 2015, where it just tanked mercilessly, just tanked. Remove all drawings, and this is so I had left the brokerage, or I was no longer with the brokerage, and then boom, we saw this huge, and this is like one, this is we dropped from 102 down to 83, right? Forcing brokerages to close, go out of business. It was a horrible move where the Swiss National Bank broke the peg they had with the euro. The euro and the Swiss franc were locked for years, and then they broke the peg. And when they broke that peg, it just collapsed. If you look at EUR-CHF, you can see where the peg broke and everything just went. Like it just collapsed and went kablooey, right? Look at that. Look at that, right? See, it was pegged, so it didn't really. They were both about equal. They're fairly. They traded a band, right? And then that band broke. When it broke, that's what happened. And this didn't take a week either. It took like hours to wipe out companies and traders. So a lot of people have been really skittish about trading the Swiss franc, including myself. But now it seems like it wants to play ball, and we can look at a weekly chart, our monthly. Looks like we could go farther down, right? With the Swiss franc, it's trending down. Interesting. They've raised interest rates a little bit. They used to be negative. But even when they were negative, it was kind of dropping too. So we've got that data coming out. So this Euro Swiss, pound Swiss may be a little bit better. And we'll all drawings here, and we can see that long wick there, consolidation. This lot of long wicks there. Daily chart, nothing really going on there. Yeah. Swiss franc, bulls versus bears. I'm constructively bearish on this thing. It's really rangy, right? We're at the top of the range. Here's the bottom of the range. So we're at the top of the range. So maybe we come on back down. Come on back down like Bob Barker. Come on down, right? So that's what I'm looking at for the Swiss franc. Economic calendar. Okay, so we've got Canada, Australia. Yeah, so let's take a look at Australian dollar, AUD, USD, and I think that's probably gonna be a pretty good setup there. Monthly, move all drawings, and you can see that it's kind of rangy. Really hasn't gone anywhere. We had been trending down because of negative Chinese data. China, the opening was kind of weak for China, but we found a higher low. We ended at 66.55. I'm sorry, 60. My God. Yeah, 66.50 area, right in there, right. So right in there on the monthly chart, go down to weekly, and we're kind of setting up for. So we have higher lows. So we've got this higher low, higher low, then lower low, but still higher than the previous low. So we do have an uptrend there, and we are maybe sitting on some type of Fibonacci retracement. We're sitting on the 618. So we're sitting on that. So we're looking for a price to get back to that maybe 71 area. We haven't been there since January, but it looks like we can hold this low. And that's the key. We have to hold this low. Let's see, buyers stepped in here, and they at 64, 64.60. They held that. We have a rising trend line created by two swing points. Point 1, 2 points create a line. We haven't have a test of the line, so the line might need to be tested, and the test may come around here at the right in the 65.57 area, right, 53 area. Okay. So may I look for maybe a test on Monday? Maybe it comes down to a test, fast test, and maybe I'll move higher. Okay, higher. Okay. Go to a daily chart. Yeah. I still like this thing to maybe we're in red, so I would just wait for a color change. Color change, trend line break. You can be off to the races here, right? On the Australian dollar, New Zealand, and then again, based on the, we might have some good data out of China, and move all drawings. And I don't know, I've never really trusted Chinese data anyway. For them to have like double-digit growth like every year was always a suspicion to me, especially when you have a closed society which has very controlled government and reporting. So I'm just wondering if are they underreporting now before they were over-reporting? Maybe there's some type of a strategy here to to take the pressure off of diplomatically. Hey, we're not such a big threat anymore. We're not so big and bad. Let us back in the international community. So just not really sure about that, but you'll know by So I would look for Australia and New Zealand to see if those currencies actually start to benefit from better relationships with China. and with more forthcoming data that's looking stronger. Okay. So Bulls versus Bears, we're touching. This is the first test of the trend line here. Yeah, trend line 1.1, 0.2, and this is the first test of the trend line right here, right? So this is a make or break area, very important area for the New Zealand dollar, because it's touching this trend line and it's being touched for the first test. So to pass the test, it needs to bounce, break, change color, and then we might see a substantial move higher, right? Because if traders can have confidence in the trend line and they know what the risk is, they're going to be very confident to take a long trade. And we can see a very, very powerful move in the in the New Zealand dollar, right? Because the risk, when you have asymmetric risk, we have small risk with potentially high gain and an area of support holds. That's going to give traders lots of confidence to get in heavy and to hold this for a longer period. Now, if we break and it's really wonky, it's going to shake the confidence of traders, and they're not going to be willing to get into this long, right? They might cut some slack to this old low for a double bottom down at the 59.99 area, or basically 60 whole number round number. They might give it a little bit of leeway, but if it doesn't bounce and respond in the next 2-3 days, then all bets are off, and then we would see the alternative view would be bearish, coming all the way down, because it would lost confidence. Like, why we're trying to hold on, and this is our last level of support here. This is probably the last level of Fibonacci retracement support, and that comes at we have a 50% here. 618 comes in here, but if that far out and you've struggled and held and you can't hold this old low, then we would come crashing down here, right? That's what we would look at for New Zealand dollar. Okay, I think we got all the currencies covered. Canadian dollar is probably the one that we didn't get, and we're going USD CAD is my preferred choice. And we can see that the big break south through the support line. We had a double bottom there. We rallied to a double top, basically, in this 13673 area, and we precipitously dropped. And now we're finding some type of support. And it's like we're finding some old levels of support here, like there. No. There, no, I'll be right. We just broke below, so we didn't close below here on for the week, and we climbed back above the trend line. So that could be bullish, a bullish move for the U.S. dollar versus the Canadian dollar, or this could be a return to the CM crud. We could see a drop lower, right? So we may climb a little bit higher, Monday, and maybe turn around Tuesday, we get a continued move lower. Because we have lower swing highs and lower swing lows, we are doing a little structure dance. And so I am bearish dollar CAD, bullish Canadian dollar. Now, if you put Canadian dollar in the front part of the currency, there you go. Now that's Canadian dollar right there. We won't draw. That's CAD versus Japanese yen. A super strong uptrend, just higher highs. It is finding some resistance though, but we can blow right through that. And you can see, so all we got to do is look for some entry levels on the 4-hour chart, and look, we got a little double top there, and then we look waiting for some type of pullback, that will give us an entry in the direction of this powerful trend, right? And so we may need to correct down to 108.35 first. These guys who got long, we need to take profit. Profit-taking declines usually end at the 38% retracement, like I taught in the Fibonacci class that we had on the other day. And then we can see a substantial move higher once we hit that area. So you want to put an alarm on like this 108. Really put an alarm on this baby. What's up off this? Okay. You want to put an alarm there. You want to put an alarm here, not there. You want to put an alarm there. So when price gets that area, you're able to be, we're going to stock it down to this area, put it on your watch list, put it on your computer alarms, put it on the MetaTrader. There's a place that you can actually add an alarm, right? Yeah, go ahead. I'm going to pull up this demo account here, right? This is a demo. Look down here and go down here to this area down here, right? And it says alerts. Click alert, and then you can right click and you can create an alert, right? And then you can say, hey, I want to do I can pick my symbol. I can pick a dollar CAD. This is an MT4. If you can find it. USD CAD. Symbol. Oh, I know. Show all. And now I go alerts, create alert. And then there we go. I got some more symbols. Yeah, here we go. I'm going to go CAD yen. And then maybe I want to put the ask value, and I can put the number in, like 108, 108.35, right? I click OK, I can test. There we go. Now I got an alert, right? So I have an alert right on the platform. So I will be able to respond, make sure I get the right price. Yeah, 108.35. Okay. So I got in there. So this thing starts chiming. I go, oh wow, Greg from the past told me to do this. I wonder what he meant by that. I've done that. I placed alarms. I go, why did you do that? Senior moment. Oh, it's going up. Oh, I should have bought. Okay. No, anyway. Hopefully you found that helpful. That tip was helpful. Let me know in the comment section that you found that helpful. Okay. Let's go to indices. Let's go to the SPX 500. I'm going to go to CFD. Just look at that. Did we call it? Did we call it? Did we call it? Right. I've been drawing arrows and points up for a long time, and look. I said we got inverted head and shoulders. We'll break the neckline. I pat myself on the back. I still think we go much higher. Look, green candles. This is up and uptrend. Higher highs and higher lows. And not making recommendations, but just get an ETF, S&P ETF, double weighted ETF, and then just ride it up. It's been going up, right? Bulls versus bears. I am bullish. Bullish. S&P 500, NASDAQ 100. Of course, yeah, it's only like 3 stocks going up all the time, but still, it's green, right? Higher highs, higher lows, very strong uptrend. I've been drawing upward arrows, breakout arrows all this time, and we're still going higher. This is a weekly chart, monthly chart. Screaming to the upside. I've been drawing arrows every week. Daily chart. We got a little bit. He had a little bit of a pullback. That was a nice entry. You could have got on bought the dip. Right? Don't be the dip. Buy the dip. Right? Now we got a double top. So we'll watch. You might give us another entry on Monday. 4-hour chart. Nice trend line break. Yeah, so the NASDAQ 100, bulls versus bears. We are bullish NASDAQ 100. Let's go to Bitcoin, BTC, USD. Remember, dollar is moving sideways, so stuff is nice breakout on, I remember I said we got this trend line. I said we could break this and we go north, and we did. And I said, I talked about the Bitcoin breakout, right? And we did break out. We rallied up, we dropped, and we broke out of this channel. And but we're at 30,000 though, right? So they're not going to let it. The powers that be are trying to wear you guys out, right? The money they made on here, they're going to use it to force it back down, right? To keep us in this range, probably, back down into this 15,000 area. I mean, look, we've been in this range for how long? We went here. This is from May 2022. We've been going down, and then we go up, and then we go down, then we go up. We're at the top of the range, right? Top of the range is bearish, even though this looks like it's moving higher. This looks like a double top to me. We're at the top of the range. And I would just say, look, until we got break like 34,000 or something significant above these previous highs, I'm looking for this thing to come back down. All right. This is just a range. It's for those of you who are a little older, you remember a game called Pong. Pong, look up Pong. It was one of the first video game, right? Just 3 blips, right? A little box that went back and forth. Boop, 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 boop. That's all this thing is doing, is this Pong game. And so bulls versus bears, I'm bearish Bitcoin. Okay. So we have covered the stuff from the economic calendar. Again, I would like to invite you to come over and visit us at Elite Traders University. Elite Traders University is a organization, as a company I created to help traders to become profitable in 90 days or less. So you can take your trading to new heights. Free resource there, income boost ebook, free masterclass that you can register to watch. We have our Forex Foundations training course that's you can get at a discount on the website. We also have mentorship. You can also register, apply. You can apply for mentorship and talk to myself get a free breakthrough strategy call, so we can get clarity about your trading, give you some tips and tricks on how to maybe get some clarity about your trading. And if you would like to move forward with us, and you can ask us how you can work with us, but the breakthrough strategy call is completely free. If you want more time with me, if you want a coaching call with me, you can actually get a $97 coaching call for 1 hour, in which we talk about the markets. And you can actually $97, maybe the best. We go to Elite Traders University live.com coaching. And so you want to get through your roadblocks, and you can come over here and sign up. I have a few spots available, so you want to sign up. It's $97, the best $97 you'll ever spend. Normally I charge $5,000 for a coaching call, for a live call, and you get to do it for $97. Why? I want you to actually sample what professional Forex coaching is all about. And my belief is that once you taste the Costco meatball, you're going to buy the whole bag, right? Okay, with that said, this is Dr. Greg McLeod. I'm wishing you much success in your trading. Remember, don't do it alone, okay? There's people who are professional athletes. There's people who are professional singers. They have coaches. They don't just pay an entry fee and become an American Idol. There's work involved. There's practice involved. There's coaching involved. And so if you want to, so rather than just throwing money away at these trials, 1,000 here, 2,000 there, you could get professional help and do it right the first time, like Robert did. My student Robert, when he was in my mentorship class, he couldn't even afford the class. He wound up getting on, doing a payment plan with me. And the payment plan, he said, "Hey, I can learn enough to make this work." So, and then he sent me a thank you. He made $47,802 on a $200 funded account, right? He was able to pass the challenge using my proprietary system and my coaching that he's been involved in. He started in June, and this is July. He qualified $14,855. His very first trade, right? Another trade for $18,354. Another trade, $15,554, or $1,664, $1,346. 676, one loss, $4,898, but a win right after that for $17,760. Then another trade, NASDAQ 100, $614. My system works for any market. It works for crypto. It works for indices. It works for options. It works for stocks. It's agnostic. It doesn't believe in any market. So people say, well, I trade options and I don't think Forex. I don't care what you trade. The system is agnostic. It works for anything, right? I used to trade options too. In fact, I started options. I started options in 1996, 95. I traded soybeans on the Chicago Board of Trade. I traded Japanese yen currency futures on the Chicago Board of Trade in 1995. So I've been trading stuff longer than people have been alive. So I do know my stuff, right? So I actually had one lady goes, oh, I don't want to talk to you because I trade options. Like, yeah, so do I. And I make a ton of money with options too, but it's slow. With Forex, I can trade at night. I can trade when I finish dinner, I can trade. So I trade a market which responds to my lifestyle, because I'm not getting up at 8 o'clock in the morning to trade the New York Stock Exchange. I'm sorry, right? I'd rather trade like 9 o'clock, 12 o'clock, 10 o'clock Pacific and go to bed and then sleep in while you're up there trying to slug it up in New York. And I had no problem with that. You can do what you want to do, but I'm trading based on my lifestyle, but my system works for anything, right? All my examples are in Forex though. So anyway, this person did this much money for you. You get to keep 80% of it. I said, is this a demo account or what? He goes, no, this is 47,000 of my funded accounts for the day so far, tipping and running. I said, wow, you're crushing it, bro. I said, do you keep a percentage of that? He says he keeps 80%. He paid $1,000 for the account, passed 2 challenges, took him 2 weeks. He got the $1,000 back. His goal is $500,000. And he says, anyways, glory to God. I can't thank you enough, right? I said, praise the Lord. Thank you for sharing this great news and trusting the process. I asked him what funded trader company he used. He uses toptiertraders.com. So that's really, really cool. Now, I help my students do that. And so he invested money that he didn't have. He put it on a credit card, but he wound up paying off the course and having a prop trading account and has $32,000 or $38,000 in his pocket. That's a win-win, right? Now, if you're not doing that, if you're just not eating, not doing anything and saving your money and putting it all in a prop trading account, blowing it up and then doing it again, what's the definition of insanity? Doing the same thing over again, expecting different results. You're not going to get different results, okay? You're going to get the same results over and over and over again. And even if you do luck up and hit some big move on one of the trades I just told you about, they'll give you $50,000, $100,000 a trade. But the worst feeling in the world is to have that money and then you max out their 5% risk, you lose more than 5%, and you lose that account and you fall from grace and you got to start all over again with another audition. Why? Because you don't qualify to manage that kind of money. You don't have the skill set to manage that kind of money. You got lucky, and some people say, I'd rather be lucky than good, but it's good to be both lucky and good. And when you're really good, you make your own luck, okay? So what I'm saying is, if you put the right foundation in, then you'll be able to get to be able to pass the audition. And we work with you till you do. And then once you pass your audition, you're going to have the skill set that you can confidently be, that you'll make consistent gains over time, right? Consistent gains that you can trust in and day out. And you're not going to be living in fear that, oh my God, I got this account. And what happens to people that get the account and the fear of losing money is so great that they wind up losing, right? Now, I mean, would you rather do something like this? I don't know. If this interests you, I don't know. Maybe it doesn't interest you. Maybe you don't like having winning trade. This is my trades on Friday. I lost one trade. So it's like, Greg, you're not that good. You lost one trade. I lost one trade. My students lose 1 or 2 trades. And that's not possible. It is possible. You just don't have the right teacher, right? You just don't have the right teacher, okay? You just don't. You need to have the right teacher. That's what I'm saying. If you have the right teacher, you will make the money, right? You will make the money. You will make the money. It's easy. Extremely. I'm not the same one. The same one too, right? Yeah, when you can just make money at will, that's even taking a small account. If you can taking a $200 account to $3,000, that's a powerful thing, right? When you can take another account, when you can take, when you make FU money, this is when you start being really good. I have some losses. I'm not perfect. I have losses. Okay, I do. I really do. Really. So click the link below and sign up. And while I'm still doing this, while I'm still teaching, it's still fun. It's really a lot of fun to have my students do the same thing that I do. And that's my whole goal, is to impart this information to other people so you can take it from the banks. The banks have been taking it from us, and I just want to help you do the same thing like my other students around the world who have done the same thing. I want to see your picture up here with them as well. Again, my name is Dr. Gregory McLeod. That's what, just one little shout out to my lovely daughter who happens to be in the Arctic Circle. She's in Greenland. Her name is Kira. Make sure you hold her up in prayer. She's a lovely, lovely young lady. So proud of her. She's at the top of the world at the Arctic Circle on a special JSEP research fellowship. She's a research fellow researching climate change, and she's at the North Pole, guys. And maybe she'll put a good word in Santa Claus for you. Okay. Again, this is Dr. Gregory McLeod signing out. Peace and pips. I love you. God bless you. Bye.
If you felt a spark here and want to see how these principles can be used in your own trading, go to www.elitetradersuniversity.com/apply to book a free session with our team. We have helped hundreds of people remove the frustration and obstacles in trading to become consistent, highly profitable traders. These are proven principles that just work. Happy pipping!